Morning, everyone. Let's keep going. Okay. Last night, Target. Last night's session on the U.S. markets is the same thing that it's been for every day since I can actually remember. My memory does not go back far enough to remember any volatility ever in U.S. equity markets. It's becoming the most monotonous market action that I can ever remember seeing. Markets literally move sideways every single day in the U.S. With less than probably 0.25% moves. This is quite incredible. We continue to see the same thing. We did close at a new all-time record closing high, and we continue to see a slightly close higher, but the volatility has just dragged on to literally nothing. We had a beat in the ISM non-manufacturing number. And then Under Armour rallied pretty hard on the back of Jefferies, MetLife, and Prudential also rising hard. But nothing, literally nothing to give us any leadership, nothing new to take out of the markets today that we didn't know about yesterday to give us a different idea of what's going to happen over the next 2-3 weeks. Looking into the Asian markets, you can see we were a little bit mixed across the session, mostly down Hang Seng and Kospi in Australia, obviously down Shanghai, really the only outlier that was up at all. But we had Hong Kong and Chinese services PMI number that was a little bit weaker than expected. The shipping stock's coming a little bit under pressure. I don't know, maybe Grindrod could come under pressure a little bit on the back of that today, but Australian banks also continuing a little bit of the slide that we saw yesterday, and Australia has actually been underperforming a little bit lately relative to, its prior outperformance. But very little to go on there as well. Okay, here we're going to look at a little chart put together by the Wall Street Journal, basically just showing the title there on the bottom, desperate struggle for yield, and we've just continued to see yields that have continued to push lower, and that's I think really affecting everything. I actually think that's one of the reasons why we've seen this spill over into the VIX. I think that today is actually a bigger day than everyone thinks because of the ECB, and we're finally going to get to see what they're going to do. Everyone knows that they're going to do some form of easing. It's just a matter of what they do when they ease. Are they going to only cut interest rates? Are they going to cut interest rates and lower the overnight lending rates? Are they going to cut interest rates and interbank lending rates? Are they going to cut interest rates and institute a 25 billion per month quantitative easing program? There's a lot of talk about all these things going on at the moment. And I think it's going to be a big question finally answered today, and you may get people start to pick sides after what they finally decide today. So just keep that in mind. That's one of the bigger talking points that we've seen in a while. So all right, there's no corporate action to speak of today. Market data. We've got, we had South Korean GDP numbers that were out earlier that came in line with prior numbers. We had, like we said, we had HSBC China services and composite PMI numbers, better on the composite, worse on the services. We've got German factory orders, or we had them already. We have retail sales out of the Eurozone at 11. And then obviously, like we said a second ago, we've got the BOE and the ECB announcing interest rates. Also later today in the States, we got initial jobless claims, which is another big one, as well as the Bloomberg Consumer Comfort Index. So just keep that in mind. The ECB, we actually could see some wild swings around that. And in fact, I would expect us to see our first little bit of real volatility in a while when they come out and announce policy, depending on how dovish they are or hawkish that we're expecting them to be dovish. So depending if they're more dovish or less dovish than we're expecting, that's really probably going to drive the markets for the next couple sessions. So just keep that in mind. A lot of people calling for the 25 billion a month asset purchase program. If that doesn't come, I think the market will be disappointed. If it does come, and not everyone's expecting it, so it'll be a bit of a a one up, and it'll probably be very bullish for markets. We may see yields continue to fall further around the globe. So just keep that in mind going into the afternoon session today. All right, let's get into some of the maps. Okay, the first thing that we'll look at is copper here. Look at it, the 1 year chart. We had a story yesterday that there's an investigation going on in China. Some of the people that have been using copper stockpiles, physical copper stockpile for collateral in China, seem to have been getting more than one loan against the same physical stockpile. So there's an investigation going on there. Obviously, I think that put some big pressure on the copper price yesterday. And also, I mean, I think that there's been pressure in general on the industrial commodities. I mean, maybe this is only because of the investigation, but it's really kind of the third one of these industrial commodities to really start to fail as of late. And it's still nowhere near the lows back in March, but it's definitely breaking major trendline support. You know, this is more or less just a big flag here after making the major drop down in March. We really flagged up right into resistance, as you can see here, and dropping out of that. So this is, technically this chart's starting to shape up very bearishly. It's showing that we could potentially go back down and test the lows of the year. And we've had iron ore, which is failing badly. We've got coal, which is now really under pressure and starting to fail badly. And now we've got copper potentially joining the party. I mean, for some of these diversified miners, Billy's has enough of their revenue coming out of oil, which is holding up really well, to maybe kind of weather the storm. But you look at the other guys, the Rio Tintos, the Anglo Americans of the world, their revenues are probably going to come under real pressure, so I think monitoring these prices going forward is going to be key, and maybe key to seeing how those shares are going to play out. All right, let's look at a couple of the other locals. Look at Arcelor here. Arcelor dropping out of a beautiful head and shoulder setup. In fact, hasn't quite really dropped out of the head and shoulder setup, I guess, if you to draw it that way. It's really dropping if you draw the right side from the right side of the shoulder. It's dropped that lateral support. So I think it probably needs to close below 3250 to properly have dropped out of this head and shoulder pattern, but it's a very clearly defined head and shoulder pattern. We get below 3250, I really think you can hammer this thing. I feel like it's kind of already dropped anyway, because there was definitely some real support. There's definitely another formation here with support around the just below the 34 level, maybe the 3360 level, and that dropped yesterday. We can close below 3250. It really should be a good night nurse, and rightly so. We're just talking about the iron ore, coal, copper coming under pressure. Oh, this is steel. I mean, it fits right into that little niche there. So just keep an eye on Arcelor. It could be some game there. All right, Aspen. We talked about this one yesterday. Got one right for once, and really making a pop out the top, and just viciously popped out the top yesterday. It was kind of the biggest move we've seen in that stock, and probably going all the way back to February. So the target on this, I think, is definitely up to close to the 300 level. What you really want to see is us to take out the previous highs, which might be kind of the next confirmation that this trade can continue to go higher. That's at 289. We got up there and tested it yesterday. If we can get above that and push higher, and hold it, I think that we can definitely push significantly higher, and probably well into the 300s on the breakout here in Aspen. All right, we're going to look at Able. So pull this forward a little bit and we look at Able. Able finally made a new closing low as of yesterday, and did it very quietly. So I don't think a whole lot of people are paying attention to it, but this is important. You can see there we've really dropped support at $8 on a closing basis, and it's the first time ever we've closed below $8. I think that's really important. I think that we're gonna make a beeline down to the 640 level, and the sort of dropping the height of this little pattern here, and a continuation move probably down to about 640 seems like the target to me. There's nothing really, I mean, unless you get some sort of news item, I don't see anything really changing the course of this in terms of sentiment out there at the moment. It's just so bad. All right, and the last one we're going to show is Truworths. Truworths also looks a little bit like that copper chart actually, but dropping out the bottom of, I don't know what I just did there, dropping out the bottom of support here. And you can see it's really been, it was kind of, you had this broadening formation kind of coming out of the, on this maybe a bear flag broadening formation type pattern coming out of this long downtrend. I mean, geez, we had, it must have been 4 months here. We only had about 7 or 8 trading days where it actually finished up on the day. You can just see how many red candles are in there. And we've dropped out of the bottom of support here. I don't see any reason why this thing can't continue to come lower. We're staring in the face right now probably of higher interest rates. You saw the ACON numbers the other day that were really soft. These things could definitely potentially come down to the lows of the year and potentially even take out the lows. So, don't think that because this thing's fallen so hard in the last 3 or 4 sessions that all of a sudden it's just going to reverse back to the upside. This is definitely a bearish pattern and probably going to go lower before it goes higher. And that's it for today, guys. Thanks a lot.